And here we are, finally going live after a lot of. All right.
Today's been a crazy day, not just because of the markets, but because of the going live on YouTube has been particularly difficult.
Yes. No. And there's amazingly 30 people watching this video than are scheduled live. So, man, our Zoom life has been going the way of the crypto markets lately, and I apologize about that. Sorry to move you into a different room. We even had live technical support via video from Rob helping us trying to get this sorted out. And Rob was like, screw it. Just hit live and go to a different thing. So that's what we're doing. This is actually going to be a fun episode. We now have only about 25 minutes to do it because I need to plug Nick Mancini from Trade the Chain. If anybody is a member of Trade the Chain, you know Nick Mancini. He is our chief community officer and a research analyst over there at tradethechain.com. And at 2:40 p.m. Eastern time, it's now 2:15. He's going to be on Cheddar live. So, head on over to cheddar.com at 2:40. Just leave us and go do that. And then you can also find Cheddar at Cheddar on Twitter, as well as most streaming TV, cable, and satellite services have Cheddar. So check out Nick Mancini at 2:40 p.m. Eastern on Cheddar. Listen, I know a bunch of you guys woke up this morning and you were probably going stir crazy, scared, some crying. I don't know. But it was all normal reactions and feelings to what happened to the market in the early morning hours. And that's why Monty and CJ, crypto analysts from marketrebellion.com, and myself are going to talk about it. And I'm gonna kind of talk about why I'm calm today. First of all, real quick before we head to the legal and the plugs, Ryan has off big day in news cycle, and he does our PR and stuff. So he's been rocking and rolling. But CJ, before I put my foot in my mouth with any non-financial advice, would you mind making sure the disclosures are out?
Yeah, just a friendly reminder that nothing said today by Trade the Chain or Market Rebellion should be considered financial advice or like a motive to act upon a particular trade. All of this is for educational, informative, and entertainment purposes only. As Mr. Gorman likes to say, do not listen to us. Trade the Chain is also brought to you by Trade the Chain, an AI-driven sentiment indicator and dashboard with actionable alerts to help you beat the markets. Definitely check out tradethechain.com where you can get a 14-day trial. Also comes with a community of active traders all throughout the world. But we will get to the dashboard and how sentiment has been shaking out here in just a moment. And then moving over to marketrebellion.com/crypto. This is Monty and myself in our community at Market Rebellion. With us and with our service, you get actionable trade insights on a weekly basis, entries, exits, and stop losses, as well as email updates throughout the week. You can ask us questions in the chat room 24/7. We also give access to our macro portfolio allocations with a pro charting platform, a trading education curriculum, and an elite community of traders all throughout the world, and much more. If you're serious about trading crypto, this is the service that gives you everything you need all in one place. And you can start your first month trial for just $1. I mean, just $1 at marketrebellion.com/crypto. We really appreciate that, guys. We also have a mobile app for the iOS users. We're hoping to be on Android soon enough. But with our plugs and our legal disclaimers out of the way, gents, any starting thoughts?
Yeah, there's a funny comment from Rob in the comments. He says Alex is calm because of his recent smoke break. So that gave me a good idea. I think we should come up with a new sentiment indicator. The amount of cigarettes that Alex smokes in a day, that tells you how much stress there is in the market at any given time.
I like it. CJ, head over into the big boards with Bitcoin. When you're done, you and Monty are done, I'm going to kind of give a diatribe and kind of just go over what I'm feeling, what I've been feeling running into this, and see if anybody has had the same emotions.
Yeah, I mean, what a candle wick on nearly all of these assets. I mean, we wicked down to nearly 29 or 30K, depending on which exchange you were looking at. Now we're sitting at about 38K, but we rallied all the way up to 40,000 at one point. So we've had over a $10,000 move here within the last, 4 to 5 hours. Pretty astounding. Let's get into the charts and dive in a little bit deeper. So I think the good thing that we can take away from this is that I think this is full on capitulation. We are witnessing capitulation on behalf of the market participants. We found some critical support here at 31K, also 29K. That's a level there as well, depending on which exchange or brokerage you were looking at. And we've diverted very far from this mean of the 20 SMA, simple period moving average. So I wouldn't be surprised if we snap back to that level, especially because of the TD buy 9 here, which is what we see. And something I do want to make clear about the TD buy or sell 9s is that they don't always have to reverse. Sometimes we'll continue going in that particular direction for 1 to either possibly even 3 candles. Until then, we reverse. I think Ethereum was a really good example of that, of the concept that, sure, even if we don't retrace right after the 9, typically we eventually come back down below those levels. So an example of that would be with Ethereum here. Sure, if you were to take profit on that 9, you'd be thinking, God, I'm an idiot. Look how much price went up afterwards. But still, price fell below that initial level. So even if you took profit on that 9, price eventually came back and would have given you more capital to buy the dip here if you so choose. And we're seeing pretty much the inverse on Bitcoin in terms of 9s. We're seeing a buy 9 that, sure, it didn't react. That's why we wait for confirmation. And we talked extensively about that yesterday. But I think we're going to continue this reaction rally, potentially close the day above 38K. Now, in terms of the overall trend and Bitcoin on the weekly chart, I think there's still a lot left to be determined in terms of where we can consolidate and find support for the overall macro trend. But in the short run, we're getting a lot of those bullish signals that might indicate a bottom. We're seeing a lot of buyers step in. We're seeing a lot of altcoins rally tremendously. One of the most crazy that I want to point out is VGX. On the 1 hour projected range, it was up here at the top just a little bit while ago. Now you can see it's dropped back down to about $2.80, but this was one that dropped to $1.30 and rallied all the way above $3. It's like 100% move. 127% increase in relative trading volume. I mean, that is just, that's what you want to see from a bullish perspective. And that's not exclusively to VGX. That's a lot of altcoins are in that kind of similar state. But man, what a day of volatility.
Yeah, CJ, just insane volatility. And you said something kind of morbid earlier in our member webinar. You said, I'm not going to feel confident that this is the bottom until I see more people crying on Twitter. Have you seen enough people crying on Twitter for this to be the bottom in your opinion? Or do you
How much is enough, CJ?
Well, obviously a lot of people are crying. I mean, myself included, when I woke up and checked my phone this morning. I'm afraid to open up any brokerage or exchange apps. I won't be doing that or checking my balance for at least a couple of weeks, maybe not a month. The reason I say I can't be confident as of now is just because I think it's a little too soon. I think we're experiencing a very strong reaction rally, but Monty already knows where I'm going with this one. And that is this particular chart here. I think this is a great projection of what we might see throughout the next 6 months, maybe even 5 months. We need to obliterate people. And we obliterated a lot of people in the last couple of days, especially throughout China with exchanges like Huobi selling off drastically. The thing that we don't really know yet is, where is the bottom going to be? Is it going to be at 25K? Is it going to be at, 29K, what we just experienced? We don't really know yet. And I think we need to slow up on the volatility a little bit before we can claim that this is a for sure bottom. As you can see, this wick has been pretty pronounced, but we're still holding. I don't know. I just think it's too soon yet to say, all right, we're going straight up.
Yeah.
I like the layover of the previous period onto that to show the extension. Sorry, Monty, I interrupted.
No, you're good, Alex. I just wanted to say that, I completely agree with CJ. I think that, we need to really cool off. We've talked a lot about the importance of organic growth to the second leg of this bull run. And I think that, with a lot of the levered longs being shaken out, a lot of retail traders capitulating, we're finally ready for some more stable, sustained growth. And I want to talk about this chart from Whale Maps on Twitter, because I thought this was really interesting, and it highlighted two important levels that I think could kind of establish a channel going forward that we may remain in for a brief period of time while we sort of consolidate over the next month or two. And that is the range between 46K and 33K. And the reason why I really like this 33K level as, potential support for a bottom channel is because of what we saw during our initial ascent at the end of 2020 and the beginning of 2021. We saw some serious price action and some serious volume happen right around this 33K level. That was where we first hit resistance. We wicked all the way down to roughly 25K. And, when we broke this level, that's when we saw a critical move to the upside. Further, it bounced back and acted as support. And the similarities between this formation right here and this formation right here are, pretty staggering to me. And because of that, I think it's setting up a very nice range of critical levels that we could be trading in. So, I completely agree with CJ that because of the just immense volatility that we've been seeing over the last just 12 hours, I think that, we're close to finding this bottom. And when we do, it's going to be a lot less of a volatile market. We're going to see more sustained growth. And I think that our time spent in this channel right here could actually be, a 1 to 2 month period of time. And this is where this to me is just a textbook accumulation phase. Like, I'm going to be working hard to accumulate as much Bitcoin as I can during this window. And I'm just going to kind of use this range as an indication of momentum. I'm going to try and accumulate towards this lower bound. But I'll also be watching for breakouts below this, because I do think there is potential for even further moves to the downside if, we just don't get that speculation and whatnot. But that being said, there are a lot of macro models that people have been referencing that, are somewhat encouraging, or even like in hindsight, CJ, that pi cycle top indicator is looking very valid now. Also, we were talking briefly before this episode about the Wyckoff distribution. I've been seeing a lot of people talking about that and how valid that's been on Twitter. So, as shocking as it's been, it's kind of par for the course for Bitcoin.
Yeah.
We've had a lot of individuals bring up the Wyckoff distribution curve. A lot of YouTubers have been talking about it, so might as well go into that and just discuss it briefly. So Wyckoff was a absolute OG.
As we look at ourselves in your screen.
Oh, can you see yourself?
We get to see the YouTube. You're good.
Oh, gotcha.
No, you switched it back to YouTube.
God, I'm running on wrong tabs here.
Yeah, just guys, CJ is our AV guy. He's the one who projects everything during the show. He has a lot of stuff on that screen.
Yeah, Wyckoff was an absolute OG when it came to technical analysts. He is not in the realm of like John Bollinger, who created the bands in 2002. That was an improvement over the Keltner channels that Keltner created in the 1960s and 70s. But Wyckoff goes way back. He goes back to the days of like Charles Dow and Jesse Livermore, all the way back in the 1920s and 30s. The guys and women who created the synthesis of technical analysis and created it and established it as an academic field. So what is the Wyckoff distribution method? Well, essentially, it's kind of like the Elliott wave theory in the sense of, it has these phases and these waves. And Elliott was another very early technician in the 20s and 30s as well. But the way I view this is it's just a shape, just like Elliott waves are shapes, and same with like a hyperwave. It's just a shape that the market has a tendency to follow. Even the Wyckoff distribution curve will tell you that no cycle or schematic model like that occurs twice perfectly. It's always a bit different. Obviously, when we look at Bitcoin, the similarities of this shape and what the Wyckoff distribution model kind of shows, it's remarkably similar. It really, really is. But in my view, in my opinion, when it comes to trading formations like this, is the more obvious a triangle is or a wedge, the more likely more traders are going to trade it, and it becomes actually a self-fulfilling prophecy. The most common criticisms of technical analysts on specifically Fibonacci extensions or retracements, or Elliott waves, or even the Wyckoff distribution, I find, is the fact that in order for these patterns to be valid, they need to be extraordinarily obvious. And a lot of traders have to be following them, because then it becomes a self-fulfilling prophecy. This is an incredibly complex pattern that a lot of amateur traders are not going to see or base their trades off of. Nevertheless, I have to give it some credence and validation because it looks remarkably similar to what we've seen. Now, I think the fortunate thing for this and any traders following this is that we've pretty much had a full retrace. How much further can we go down? I'd say 25K, but I'd see it's a very low probability we go below that, or even reach that to begin with. We'll have to see how this reaction rally shakes out, but we've pretty much done a full retracement and capitulation to pre-euphoric levels. So that's a good thing for the long term. I truly believe that.
Yeah, I agree. Short story here. A lot of people know my morning routine. I tell them every day. But 6:30, about 6:37 a.m. this morning, I went out into the ocean, my backyard, and was bobbing there as I usually do each day. And I was remarkably calm, and I was calm, for the reasons that we discuss on this show and have been discussing on this show about the end of the bull run or what the market might do for the last half a year. And why I was calm was because I said to myself, if the bull run has inadvertently ended today, and this is where we're going to end up, I'm going to be okay. We have been talking about a 40 to 60+% retracement of Bitcoin at the end of the bull run from our, the historics on it and what the entering the next cycle looks like. And we're in that zone. So if we were to end the bull run now, and this is the level that we're going to see moving into the next cycle, I'm okay with that. Granted, the run down to here for the last couple of weeks has kept me on edge, on a day over day basis, but finally felt like it just bottomed. So with that being said, I don't believe at all the bull run has ended. I do believe that our call for the end of the year is still a very much opportunistic zone for this. And I do believe in what CJ's been preaching this whole time, which is we're going to have a high velocity second leg up until that meets. So I'm happy. And, I think the first thing I want to ask everybody is, did anybody opportunistically enter any positions during this massive downturn? First of all, Monty, CJ, you guys mentioned, I think ADA hit $1.08 maybe. We talk about Voyager in the single dollar range. Now the problem with that is, did anybody have any apps that wouldn't load? Voyager was down today. There was, I heard Gemini was, I heard Coinbase Pro was down. So maybe some people missed those opportunities, and that's unfortunate. But in looking at it and what I had to do this morning, I haven't been buying the dip. I like to buy the reversal. And I go with what CJ says when we do Trinity trading, and that's look for the affirmation. Sure, he loses a little alpha in trying to get that reassurance, but the same with the dip. You buy the dip, it could keep dipping. You get a nice reversal and some nice technicals on that. Well, it's good. And the other way around, sell some profits on the way up. Don't wait for the tick down. So, that's my outlook. And just to give everybody a little picture here of what's going on, I'll just share my screen real quick. We have some
Please don't be a
good.
picture of you bobbing in the water.
I'm trying to make sure I don't hit that screen.
This is a good opportunity to say, please hit the like button and subscribe if you haven't already. I see Dan in the chat spamming that. So please.
Happy to have Rob around.
Thank you. We appreciate that. But please hit the like button. It helps the YouTube algorithm. Alex, what do you got for us here?
So, look at here. We got 1.68 trillion in total market cap. I want to remind everybody, we lost nearly $1 trillion of overall market cap in the preceding week. And that's big. That's a huge evaporation out of the crypto markets. Obviously, here's the Bitcoin and price sentiment for the last 7 days. It looks like a horror movie. A lot of blood on the floor there. And then to what CJ was speaking about with the let's get the high 1 hour projections here. So these are the 1 hour projected price range due to sentiment. You got some reef. Look at this hourly. You got a few that are getting there that are bullish. If I take the hourly sentiment and I reverse it, see what we get. There we go. Basic attention token at the bottom of the list right now for sentiment. Very bearish. A lot of red going into neutral. But listen, $1 trillion in the last week is a lot. So we'll see where we go from there. I'm feeling good. Are you guys feeling good? Do you guys feel that we're about to maybe go sideways for a little bit and then enter that velocity upswing?
Yes. And let's go back to the inverted chart. I know
everybody loves the inverted chart now.
Yeah.
Play games with your mind.
Oh, let's see what we got here. That's Bitcoin dominance, as you can see. All right. You guys will like this because it'll show us that we're probably close to a top in terms of falling price action. So obviously a lot of sell volume here, but when we looked at ADA and Ethereum, once we hit that 9, we typically go back below that level. And as you can see, this is already turning into an inverted hammer candle, one of the most probably the second most bearish candle in existence, other than just a bearish engulfing candle. If you get that following a 9, which is also an inverted hammer, very bearish generally. And that's what we're seeing now, right? Like we didn't reverse on the 9 or even directly after it, but that doesn't mean it still doesn't have impact in the overall trend. So in the short term, I do think we're going to come back to this moving average. It doesn't have to happen tomorrow or even the next day, but I don't think that the trend is just going to ignore that 9, especially with how oversold this market is. I think we're eventually going to come back and touch that moving average, and it'll probably be around 40K or 47K, where or I meant to say 45K and 47K, those two levels, because they acted as strong support, on the way down until it broke. So we'll see. That's the inverted perspective. I know you wanted to talk about loans, Alex.
I did. I know we're running a little behind. I'm going to keep going. It's 2:40, but if you guys want to see TradeTheChain.com's Nick Mancini live on Cheddar TV, hop over to Cheddar.com, or Cheddar's also on all your major TV streaming things. So I won't be insulted, and neither will the gents if you guys bounce. But if you do stick around, the last thing I want to touch on today, and there was a lot of backlash on Twitter, is the massive risk with crypto loans. And these are everyday people who go to platforms, let's say BlockFi, Celsius, Cred, any of these guys, and they take these loans out, maybe small, maybe a couple $100, maybe for a new car, maybe for a new bathroom on the house, who knows. But what happened today in one instance was obviously one of those big risks. And I'm not singling out BlockFi. I just saw the backlash that was happening on social media with them. And so I can't even tell you that's confirmation, but it came from a ton of people. So it's probably where there's smoke, there's fire. But there was obviously liquidation calls that were happening on normal folks who had these loans. And what happened that I mentioned earlier with Voyager and Coinbase and Gemini going down is BlockFi went down. And these people could not top off their collateral. They were willing and able. They want to top off their collateral. They couldn't, and they got liquidated out of these loans. And so, that's what I wanted to bring to everybody's attention. CJ Monty, jump in with whatever opinion you may have. There's a lot of people hate mailing on Anthony Pompliano, who's a major shareholder, on Zach Prince, the CEO. So, chime in.
Yeah, this is just a really interesting situation that's playing out on Twitter here. CJ and I have talked so much about the importance of organic growth for the market, and I feel like just that space of crypto, not necessarily all of crypto lending, but just the crypto loan sector was kind of, and there was too much incentive there for price to be driven down. Like, it was the same thing with all these leveraged longs in the market. There's just too much incentive and too much money to be made playing the market short right now. And like, that's kind of why, like you, Alex, I think I'm feeling a little bit more relaxed today. There's just a lot of pressure that's been relieved from the market because we were very overbought. We went from overbought to oversold. But for me, that's like just a ton of weight off my back because like it did feel, because of, the prominence of all these crypto loans and all the levered longs in the market, that there was kind of just this like hammer waiting to drop on us. And this morning it finally dropped. It kind of came at the expense of a lot of people taking out these crypto loans, like you said, but the market just feels a lot less overbought this morning than it did just 24 hours ago.
CJ, your thoughts?
Yeah, this is rough, right? Anytime you get liquidations, but the fact that like there was a forced liquidation because the actual app is down, that sucks. That's a harsh reality of the infrastructure and it's still being in its infancy. If you don't have the bandwidth or the servers or the liquidity to keep the app running, and users are prone to these type of mass liquidations, it's very dangerous. And obviously it's not going to be good for your brand or anything, but I don't want to say too much on BlockFi. I'm sorry for the people who were liquidated on those loans because they couldn't access their portfolios. I guess it's just a lesson to be learned moving forward here.
Yeah, and just even obviously not blaming anybody, just bringing up what's in the news to even it out. I did see very similar chatter on social media about Celsius as well. So I don't think it was just consolidated to BlockFi itself. But just to give an example, guys, let's say you're borrowing $10,000 of fiat and you're putting up $15,000 of Bitcoin at the time to take out that low APR loan. When something like this happens and it's not your fault, and you go to top off that collateral, when you get that nice little email that says you have a margin call because you're borrowing money so cheap, in the end it could cost you very big when Bitcoin goes up and you've been liquidated. So just keep an eye out for that tolerance.
You can't have diamond hands with leverage or collateral, because if you get liquidated, they confiscate your diamond hands.
They'll cut those hands right off.
And you gotta replace them with paper hands. Listen, again, the consensus, folks, is we're feeling in good place. We're looking for a velocity leg up. If this was to end, which we have no belief that it is, we're still at really great levels for whatever the next cycle may bring us. I always say at the end of the show, hang on to your handlebars, hang on to your handlebars. And more importantly, you know, something that's really important during one of these market cycles is make sure you have the tools. Know before you go, make sure you have the tools. You know, I mean, listen, we're on here, you know, showing our faces on YouTube, and we enjoy doing this every day, but we also both work for companies that are great tools during these market cycles. So make sure you're prepared. Visit marketrebellion.com/crypto to see Monty and CJ's. Obviously, check out tradethechain.com as well. And 5 minutes ago, Nick Mancini from Trade the Chain went live on Cheddar. So get the hell out of our chat room and go over there and watch it. Smash the like on your way out the door. And as always, we'll try to get the live streaming correct for tomorrow. Love you all, folks. Thanks.